Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video I'm going to take you through the week ahead analysis. I'm going to go over the news for this week and some charts of interest. So very heavy news week this week. It's all that news jam-packed into this week, the week before going into the Christmas period. And it's full of this high impact data, which is pretty scary, really. You know, look at all that high impact data that we're going to get this week. I had to zoom out on the on my screen just to fit it all in for us today. So there's lots to cover. There's lots that I think are more important than others, but still very much going to be a high volatility week. Now, we always talk about what happens in high volatility. Now, usually in high volatility weeks, we see the market shift sentiment to more of a sort of risk-off sentiment, where the yen usually outperforms or performs quite positively, as well as the likes of the US dollar. So just something to keep in mind this week, because of the whole high volatility that's going to be created because of so much high impact data. We may actually see the US dollar perform pretty well as the yen, potentially. Okay, now that's going to have to come down to some other implications as well, because I think one of the biggest days we're going to have is Tuesday and Wednesday, but Wednesday really is going to be a huge day because we have the FOMC statement and the federal funds rate, and this is where we could see the Federal Reserve hike by 50 basis points and see the actual slowdown of the tightening pace to come for the next sort of projections for the FOMC. So are we going to start to see that 50 basis points move, and will they then talk about further impacts of slowing down the pace of tightening in future federal funds rate announcements? So that's going to be the real key this week. But before that, we have some CPI data. So again, is it going to rest on what happens here? You know, what if we get a jump in CPI? We are forecasted to come in lower. You can see here 0.4 to 0.3, 7.7 to 7.3, 0.3 to remain the same there forecasted. But what if they see a huge jump? Okay, so Tuesday could really rock the boat for Wednesday. Okay, if Tuesday comes in with some really strong numbers, so let's say we stay around the 7.7 or above 7.7, which is slightly unlikely considering the data that we have had coming out recently. But if we were to see a jump here, for instance, then, you know, let's say 7.7 or something like that, or from the 0.4 to sort of 0.5s or 0.6s, anything to suggest that the inflation isn't slowing down. I think the Fed are going to have to make a serious decision of what goes on here with regards to, is it going to be 4.5% on the rate hike, or is it going to be 4.75%? So Tuesday, I think, is really where the volatilities are going to start ramping up, around about that 1:30 p.m. That's British Standard Time for me. So around that point, we're going to start seeing some high volatility going through to Wednesday. And then it doesn't really stop there, because we have other central bank data releases at that point. We have a central bank release from the Swiss National Bank. Swiss National Bank are also looking to hike interest rates from 0.5% to 1%. So that's a 50 basis points hike move coming potentially here for the Swiss National Bank, which is forecasted, so it will likely happen. We then also have a 50 basis points move in for the Bank of England as well. So 50 basis points, across the board, ignore that right in there. So we're starting to see these 50 basis points hikes. Again, another one from the ECB. So lots and lots of high volatility data, and then we're finishing off the week with a lot of PMI. So again, high volatility is coming towards the end of the week, but this week is going to be a very tricky trading week, so it's going to be very important to remain very calm in your trading and very adverse to risk. And what I mean by that is, if you're not somebody that's very risk adverse, then you could be looking to just lower your risk for this week in your trading so that you're comfortable with the risk in the market. Or it's a pretty good week to stay back and just chill and watch the markets and see how they pan out. Now, you've also got the currency strength meter just highlighting that the New Zealand dollar is the strongest currency, and that we've got the US dollar and the Canadian dollar at the lowest, at the weakest at -5. So that's only really pointing that out. That again could start to change this week. If the dollar starts to strengthen, Kiwi could weaken. But I think what we're really going to be focused on is our key levels for this week. What is the market, or where could the market move to, and where should you action opportunities? And I think in a high volatility week, that's going to be around key areas of interest. So, you know, at the moment we're sticking around the 1.05 handle or the 105 handle on the US dollar index. We're kind of staying around that area at the moment, and if we do get the dollar strengthening because of the high volatility, then, you know, we could see this sort of channel that's been formed here start to have a bit of a breakout move, and we could start to see a move back to the 108. Now, if the Federal Reserve disappoint and we see something completely different, then we could see the move down to the 103 spot 50, or even down to sort of the 102s, where this longer term trend line is, for a move back to the upside. But I think we'll probably have a fairly range bound week until Wednesday, or even Tuesday, before seeing some potential moves back to the upside. I'm favouring dollar upside in the short term. Now, euro dollar is at an area of interest, so this is why I'm interested in this price, because we're coming into higher time frame trend line resistance. We've also got the 1.06 handle, and very much like the US dollar index, we're at support, but obviously on euro dollar it's resistance. So this could be an area where we start to see sellers start coming into the market now. So I want to be starting to look into see how price reacts in and around these areas. If we do clear higher though, we do have another level up at the 1.0775 handle, which are these previous structural highs here. So if it was to break higher, we do have another level of interest above. But again, I think the volatility this week is going to give the dollar a little bit more favour. That being said, New Zealand dollar tops the sort of charts in terms of the strength meter, saying that we should be either strong buyers of this market or looking for reversal opportunities. I think last week's sort of slowdown in that impulsive phase is giving us a little bit of a clue as to what could happen here at the 0.6450 handle. So I think if price trades through these lows, trade through this trendline support, we could start to see the volatility trade price to the downside, as long as we can trade through those 0.6280 lows. Finally then, gold. I think gold's going to be a very interesting market to watch this week. How does this react to the volatility being around the $1,800 level? If the dollar strengthens significantly, will we break trendline support through here, head back to that 1725? Or will investors seek gold as a little bit of a haven with all the volatility and push price above the highs? I think if we trade above the highs, 1875 is your next target of interest. If we stay below $1,800, the next point of interest is going to be 1725. So I hope that made sense. Be careful this week. Lots of high volatility data. I hope you enjoy your trade and I hope it goes well. Thanks for watching this video update, and I will speak to you in the next video.